254,000 jobs were added in the month of September. That is over 250,000 jobs for the month, and it completely smashes the 140,000 that were expected. Maybe with the election coming up, maybe these numbers are manipulated. Personally, I've seen more people laid off in the last 2 weeks than I have toes and fingers. I'm seeing a completely different trend taking place out there. The September job report is fresh off the press, and the numbers have completely blown past expectations. And when I say completely blown past expectations, I mean the numbers are shocking. They are almost questionably high. Now, in this video, we're going to discuss this latest job report that came out. We're going to talk about what it means for the economy, what it means for you and me. Now, before we get started, I have to ask for two things. Smash that thumbs up button, give your thumb a workout, your thumb deserves it. And also, if you would like, leave a comment down below letting me know what you think about the topic. Now, the September job report numbers are in, and if correct, 254,000 jobs were added in the month of September. That is over 250,000 jobs for the month, and it completely smashes the 140,000 that were expected. The unemployment rate also dropped down to 4.1%. That is down from 4.2%. Now again, these were not the expectations. People were expecting much different numbers, and unemployment was expected to stay at around 4.2%. The service industry was a big driver for the jobs that were added in September. Healthcare added over 71,000. The hospitality industry added over 78,000. And the service industry as a whole added over 200,000 jobs. Now, this is a monstrous job report. I cannot emphasize that enough, how out of left field these numbers are. This was not the expectation. Again, 140,000 was the expectation from a lot of economists, from analysts. I was expecting something closer in that realm because that's what we saw the last couple of months. In July and August, you had, about 150,000, something of that sort. We were expecting similar numbers in the month of September, but that is not the case. Again, you got to remember, when the Fed decided to cut interest rates by 0.5%, that more aggressive rate hike, they stressed that it was the labor market that was starting to show cracks in the foundation, certain weaknesses, and they wanted to address the labor market. Well, I can guarantee you that rate cut is not the reason why the numbers are where they are. It's too soon for that rate cut to be in effect in the economy. And so the labor market, at least for the month of September, is showing us, just something completely different than we saw the last couple of months. We saw a weaker, more sluggish labor market. Well, that is not what we just saw in September. Now, personally, I questioned the numbers when I saw them come in. When I saw the information, I wondered if this was going to be one of those months that gets revised down later on. I also thought maybe with the election coming up, maybe these numbers are manipulated. Personally, I've seen more people laid off in the last 2 weeks than I have toes and fingers. Now, I'm seeing a completely different trend taking place out there. Now, I understand that the service industry, it is more volatile. It's especially hospitality. I understand hiring can go in swings, and right now it seems to be swinging up. And it's all good news for the economy if the numbers are correct. And hospitality, as far as hotels, restaurants, things of that nature, if healthcare is, getting an infusion of workers and all this type of stuff, well, that's great news for the economy. And if unemployment really is going down, again, great stuff. I'm not complaining. I'm just questioning the data. We've seen big revisions in the past. Whole years getting revised by over 800,000, months getting revised up in the, I want to assume that the information is correct, but with it being so much higher than the expectation, it's just, it honestly shocked me. And for the Federal Reserve, we are expecting 2 more rate cuts to end the year. 2.25 rate cuts, so to get it down a whole percentage point by the end of the year. But the labor market was a big driver for them wanting to cut by a whole percent by the end of the year. So now with the labor market showing, signs of being a strong, robust labor market, I kind of, how will the Fed take this information? Will they still cut by 0.25 in November? Will they do it again in December if this type of trend continues? Now, I think that November rate cut is still pretty much on the table. I don't think that they'll skip it, but at the same time, I didn't expect the job report to look like how it did as well. So it'll be interesting to see how the Fed takes this information, but the labor market is showing signs of, a robust, of a strong labor market, just something that we did not see the last couple of months. The port strike has also ended, so that's obviously good news. I know that really has nothing to do with the labor market, but the port strike has temporarily ended. They've reached that temporary agreement, and those inflation scares that we thought about, with goods just not getting out and being more scarce, well, that fear is kind of off of the table, at least for right now, for the Fed. But with inflation probably going to stay where it is, but the labor market also, not showing those signs of weakness, you kind of do wonder, will the Fed just kind of sit tight with that 0.5 rate cut, or will they continue on their rate cutting cycle, even though the labor market might not be showing that it needs it right now? Obviously we'll see what the October numbers say and so on and so forth, but September, fresh off the press, completely blown expectations, and just kind of showing a different labor market than the one we've seen recently. Now, if you like content like this, smash that thumbs up button, give that thumb a workout. Your thumb deserves it. And if you would like, leave a comment down below with your opinion on the topic as well.